Good morning, everyone, and welcome back to this new edition of the weekly analysis. Let's start with a quick recap of what we've seen. Basically, this was the first weekend in a few weeks where there weren't any events that caused much movement at the start of the week. So this is definitely a good sign. The markets are responding well to this, and in fact, even this morning the trend remains unchanged, just as it was on Friday, with a strong upward push. Prices keep rising even though the underlying volumes aren't particularly high. However, this doesn't mean that high volumes are necessary for growth, because most likely sellers have simply moved their lines of defense higher up. It's clear that right now we're entering areas that technically we can call uncharted territory, meaning zones on the chart where prices have never reached before. On Friday, the S&P 500 index broke its all-time highs, and the Nasdaq had already done so a few days earlier. So as far as the United States is concerned, the trend continues to be strongly upward. In short, Europe is also continuing to perform well, even if a bit less so compared to the United States. But even, for example, the DAX, which is the European futures index we follow, is just 500 points away from its all-time high. With current values, that's about 2%, something that could absolutely be achieved in just 1 or 2 days of strong gains. That said, this week is quite important, and above all, it's a short week. Let me remind you that Friday is the 4th of July, so the stock exchanges, the American markets, will be completely closed, and even on Thursday, the trading day will be shortened. Thursday will actually be the key day of the week, because due to this holiday, many data releases will be moved up to Thursday. So on Thursday, we'll have not only the services PMI, which, let me remind you, is the most important when it comes to the composition of the US GDP, since it accounts for about 85% of the US GDP. So it's an absolutely crucial and highly referenced figure. And in addition to this, of course, we'll also have the non-farm payrolls, which have been moved to Thursday, because Friday is the 4th of July, making it a short week. So pay close attention to Thursday, the highlight of the week from a macroeconomic data perspective. Another aspect to consider, which we've already mentioned several times, is that of the so-called whole fund control. These are funds that by necessity have to enter the market, and it's expected that in July they will have to inject about 100 billion into the market. So we'll see if this will continue to support these markets, this rally that is ongoing. Another aspect to consider is also the thaw that has begun, let's say, between the United States and Europe, with Trump's statements that are open to any solution regarding the 9th of July deadline. In a press conference, Trump said that it's a date on which they can do anything. They can postpone it, confirm it, or they can delay it. So it's something that the markets have now absorbed, and they're just waiting for the details of these agreements. And with that, after this brief but necessary recap, let me remind you that today marks the end of the semester, so maximum attention and maximum caution are needed, especially in these days of waiting, leading up to the key day, which, as I mentioned earlier, we can definitely identify as Thursday. From an operational point of view, let's start with the Nasdaq. At the moment, we're already working on VR0, so on the levels that are defining the weekly maximum range. If this range is broken, the trend will start to become more pronounced, so we can monitor VR0 and VS0, and we can play within this range. Again, the current trend is definitely showing upward momentum, so on the upside we should monitor the 23,900, 24,000 area, while on the downside we should watch the 23,600, 23,700 area. I don't really think there will be much more than maybe a test of this area, but I expect the trend to continue. There's confidence at the moment, so unless some black swan event hits the market and clouds what currently looks like a bright sky, the trend should remain as it is. We can confidently say the very same thing about the ES. As we have previously mentioned, the index has decisively broken through its all-time historical highs. So here too, the overall situation is exceptionally excellent, and the powerful upward momentum remains incredibly strong and robust. The situation is exactly similar to the Nasdaq, so here too we are working in the upper part of the weekly range. At first glance, that's between VR0 and VVR0, and we need to understand that a break of 326,255, so the VR0 area could easily push prices straight up to the VR1 area, basically going to test higher levels. On the downside, we are obviously monitoring the area around 6,000, 6,190, 6,180, which we can identify with this PV here, but frankly, as I said, I see the trend as upward, not well. We'll see if everything will actually be supported by real movements. Of course, for the other two American futures as well, the situation remains similar. Now, let me show you the Dow Jones. You can see how it has broken out and is trading above the highs, even above VR0, almost halfway between VR0 and VR1. Then after retesting from above, it will probably make another leg up, could make another bullish leg, or maybe re-enter the range and test the weekly HV level. That could also be a possible scenario, although, as I said, at this moment the trend is strong, the markets are quite robust and clearly oriented upward. Let's also take a look at the Russell, which we find here. Here it is, we're just below 2,200. Here too you can see how the VR0 levels act exactly as an initial cage for the weekly movement. So we can easily monitor this range as long as we remain within these VR0 and VS0 ranges, meaning the weekly levels. We can operate within the range, going short at the top and long at the bottom, or perhaps prefer to only trade in the direction of the trend, which can definitely protect us from sudden spikes that, if they do occur, will probably be more likely to the upside. Let's also look at the DAX, which, as we mentioned, is also performing quite well. As you can see, this morning it opened around 24,300. I'd like to remind you that 24,500 is the all-time high, so we are not far off. Here too, it tried to move above VR0, but then right with the opening candle, it moved back into the range. We'll probably go on to test VS0 and then maybe stay within this range with a good chance, or perhaps make another push to the upside. We'll see how the day unfolds. Let's move on to commodities, starting with oil. Oil has pulled back after the ceasefire in Iran, which obviously has helped calm the situation a bit. The price of oil has dropped significantly, returning more or less to the levels where it started at the beginning of this so-called lightning war. At the moment, it's clearly moving within a sideways range. If we zoom out a bit on the chart, you can see how we've re-entered this limbo, so we'll probably stay right here at these levels. As a sort of contrast to the indices, you can see that oil first went down to touch the support level, only to recover a bit afterwards. This shows that oil too is following this upward movement in the stock markets, with the pullback coming after the ceasefire. So this has obviously caused the price of oil to drop from the highs it had reached when the winds of war were blowing. So let's move on to gold, which we see here. At the moment, it has found a support base right at those levels we've pointed out several times, around the 3,280 area, very important level, a key support. If this is breached, prices could slide much further down. In fact, last night we broke through it and tested the 3,250, which also corresponds to this week's VS1, but then it managed to recover all the way to VR0. So here too, gold has bounced back. We know that it's definitely a safe haven asset, which can lose a bit of value when markets offer high returns. But as I always say, at the core of this asset, there are a number of variables we can't really know or properly weigh, because we don't operate or know the actions of central banks, which certainly don't act in a predictable way. This leads to movements that on many occasions go beyond just technical factors. Alright, having said that about gold, let's take a look at Bitcoin to get a more complete picture of the cryptocurrency situation. Basically, after the strong performance it posted last week, it's been moving sideways for a bit, but still managed to retest end last night. In fact, we broke through the previous highs, only to pull back again due to the usual volatility. Let's say that 73,800 could be a key level at this point. On the downside, we then have 106,400 and 106,000. On the upside, we're keeping an eye on this area around these two highs. If broken, prices could push up to the 109,000, 110,000 area, which more or less corresponds to recent weeks' highs. Well, let's say I rushed a bit. I'm running a little late, so I hope I haven't forgotten anything. As always, please pay close attention and protect both your financial and psychological capital. Here, as always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thanks everyone for your attention.